Hello traders and good morning and welcome to today's market overview. So traders, just going to run over the major currency pairs and I will be going over the fundamentals and the technicals that we are seeing in the market today and potentially what trading setups we can take based on what's driving price at the moment. So traders, just starting off with the euro versus the US dollar. We clearly know traders the euro USD is in a clear downtrend at the moment, which is really being driven by the expectations that the central bank in the United States, that is the Federal Reserve, will be hiking interest rates at next month's Federal Reserve monetary policy decision meeting, where they're expected to hike interest rates by a quarter of a percentage point. And more importantly, traders, markets are anticipating that the Fed will potentially hike interest rates three times this year, more than two times, which is why the dollar has been very bullish across the markets over the last few weeks. Now, what we're seeing in the markets at the moment, trading for the euro, is that the euro is weak because of the expectation that the ECB may not actually end their QE program in September as previously thought by the markets. Now, if you look at the analyst channel and you see the video I posted on the euro traders, I did go over the euro in great detail, explaining how the ECB, the European Central Bank, has been pumping billions of euros per month into the euro economy to try to stimulate spending and try to bring inflation back towards their 2% target. But currently inflation is way below their 2% target. And while inflation is low, they're not going to be ending QE, which basically means there will not be any interest rate hikes happening in the Eurozone anytime soon. Markets were anticipating potentially halfway through 2019, but while inflation remains low, traders, interest rates will remain at record lows in Europe, and of course we know this means the currency is in less demand, while interest rates are low compared to other currencies such as the US dollar, where interest rates are high. And if you look at the video on interest rate differentials, I have posted traders in the analyst channel. I will give you a thorough understanding on the carry trade and how that plays a major role in dictating price action and trends in the market when looking at two currency pairs. So at the moment, dollar's bullish, euro's weak. We have come down and hit off the 200 moving average, which is a major step in terms of looking at the overall trend. If this can break below this moving average, it does signify that maybe there is a reversal in the overall trend. And we must remember, looking at the euro USD, it has been on a very strong uptrend overall if you're looking at over a higher time frame in 2017. So traders, it'd be interesting to see what happens with the euro. Is all down to inflation data. What does inflation show in the eurozone? Does it show that inflation is moving towards a 2% target, or does it show that inflation is remaining at very low levels? And as long as it remains low, the euro remains weak. However, if of course inflation starts to creep higher, then this will support the euro, because markets will start to anticipate that the ECB will end their QE program in September, and if they do, then interest rate hikes will soon follow, and this will give the currency a support in the market, because markets will start to buy the euro into anticipation that the ECB will end QE, and then interest rate hikes will start to begin in 2019 for the first time in over 10 years in the market. So this is Euro USD traders. That's the fundamentals driving both currencies. Now we're moving on to the Great British Pound USD. So we know the fundamentals for the dollar. We know the dollar is bullish because there's interest rate hike expectations. The markets are anticipating potentially three more rate hikes this year instead of just two, and it's really being driven by Donald Trump's tax cuts in the United States that he did earlier this year, and that's really expected to boost spending in the United States, because there's more take-home pay for workers, there's more take-home pay for businesses to reinvest in the economy, and this should really boost spending and inflation. Then of course we know the Federal Reserve will have to hike interest rates at a more rapid rate to try to maintain inflation around their 2% target, and this is what's causing the dollar to be bullish. And looking at the pound trades, we know the pound weakened because the expectation of a rate hike from the Bank of England diminished this month, as economic data in the UK was really poor and it really killed the hopes of a rate hike. But moving forward, traders, the key economic data for the pound to know when to buy the pound, which I did post a video last week I posted a video on it, is really wages. Wages is the key. I will post another text that I have posted in the analyst channel, understanding why wages are so important. But the Bank of England, similar to the Federal Reserve, is monitoring wages as the key indicator to know how aggressively they should hike interest rates, because wages tell us how quickly people's spending is going to increase in the economy, and this is what the bank's closely monitoring. And also, inflation data is the key, and we do have inflation data out of the UK this week, and this will be really closely monitored by the markets. And if inflation in the UK starts to creep higher again, the markets will start to buy the pound in anticipation that the Bank of England will hike interest rates in August's interest rate decision. But of course, not just inflation, wages, the unemployment remain at record lows. And I will send a text feed traders explaining how this all correlates with each other with these key economic data indicators such as wages, inflation, and spending, and why they're so important for traders to understand how an economy is likely to perform. And then the markets will buy that currency in anticipation of how the economy will perform. Because remember, markets are always trying to price in what they expect in the future, not what they're seeing now. So traders, Great British Pound USD remains below, just above 1.34500, but it does remain within the range with upside resistance at 1.3600, and we will continue to see, I think price action is similar to this at the moment, where it's not really going up or down, it's just trading sideways until the UK data comes out tomorrow, and then we get a clear idea of how is inflation performing in the UK and what's going to happen with potential rate hikes by the Bank of England. So traders, looking at the USD CAD, as I just mentioned, traders, the CAD Canadian dollar is finding a slight bid in the market in the last 2 days, being pushed higher by oil prices. As I've explained, the Canadian dollar is a commodity linked currency in the markets, and when oil prices go higher, so does the currency, because oil is their major exporter. So that means more money comes into the Canadian economy per barrel sold on the international markets. But again, traders, NAFTA negotiations, which is the North American Fair Trade Agreement between the United States, Mexico, and Canada, is still being negotiated. And while these negotiations go on, and while Donald Trump still threatens to put import tariffs on Canadian exports to the US, the Canadian dollar does not remain strong, and it remains a cautious trade. And that's why I'm remaining out of all CAD trades. I'm not trading the Canadian dollar until I understand what happens with the NAFTA negotiations. Is there a breakthrough? And if not, then I'm just going to remain on the sidelines, and I'm not going to risk trying to buy the currency or sell the currency, and then NAFTA can get me caught on the wrong side. Sorry, Charlie. Of the market. So I would stay at the Canadian dollar, US dollar. If I was you, I would stay at all CAD pairs. That's my honest opinion, because NAFTA is the key. And more importantly, traders, the Canadian Central Bank has said they're looking to continue hiking interest rates, but it all depends on what happens with NAFTA negotiations. This is why NAFTA is the key, because it will give the market the indication of what's going to happen with interest rates, as well as how will the economy perform if they get a free trade agreement again with the US and Mexico. So traders, looking at the US dollar JPY, we know the Japanese yen trade is weak at the moment. We know it's a safe haven currency that's only going to appreciate in terms of market uncertainty. So while there's trade war concerns with the US and China, we know that the Japanese yen got stronger when there was war with the threats of war between North Korea and the United States. The Japanese yen got stronger, so on, so on. However, we now know with all these trade war concerns kind of fading, and we know that North Korea situation is getting better. We know now the safe haven demand into the Japanese yen is weakening. And we must remember, traders, the yen is a safe haven currency. Whenever there's uncertainty in the market, investors flood into the yen, buy the yen to park their money as a place to secure their money in terms of market uncertainty, because Japan has the biggest trade surplus in the world. And this basically means that investors have the confidence that they'll always get the money back, because there's a less likely chance that the government will default on their debts, which means that when money floods into Japan, into like short-term bonds, when there's market uncertainty, the currency becomes in high demand, because all of the investments in Japan, of course, will be quoted in Japanese yen, meaning that the currency has to be purchased first to make investments in Japan. And this is why the currency strengthens in terms of market uncertainty. However, we're still in an uptrend. We're still in this trade. Traders currently 24 pips in profit. We did get a slight pullback yesterday, but I do expect price to try to reach 11200 in the next week or so. So we're going to be patient, hold this trade, and hopefully we should hit our profit target fairly soon in the markets. Similar situation, traders, to the USD Swiss franc, which is a safe haven currency. Again, we must remember, traders, the Swiss National Bank has said to the market they are reluctant to allow the Swiss franc to be overvalued through safe haven currency flows. They want the currency to be weak for the simple fact that inflation in Switzerland is very low, and they want the currency to remain weak, so exports coming out of Switzerland remain cheap. That means more money can be coming into the country from export sales, and that money coming into the country then can be reinvested and used to spur inflation towards their central bank's 2% target. So any pullbacks in USD Swiss franc should be seen as buying opportunities in the market, but I would rather wait for a real strong impetus to buy the dollar against the Swiss franc, such as some strong economic data at the moment, more than a technical strategy. That's my advice to you. Upside resistance currently is 1.0100 and downside support is 0.7500, and then the main key areas to pay close attention to, currently in no man's land at the moment. So traders, Aussie dollar, US dollar. Yesterday we had a stronger Aussie dollar, and I must remember, traders, I did say to you guys the Australian dollar is heavily linked to the Chinese economy. China is Australia's main export partner, so Australia exports most of its goods to China, and with the US and China locked in this trade war threats between the two nations, because America's unhappy with the trade deficit they have with China, because if China and US do have a trade war, of course, this will greatly affect the Chinese economy, and anything that affects the Chinese economy will have a negative impact on the Australian economy, because any slowdown in China will mean that less goods and services will be bought from Australia by China, so less money comes into Australia. Hence why whenever there's trade war concerns, the Aussie dollar suffers. And when yesterday there was good news on the trade war, when the United States said they're going to pause the Cold War with China at the moment and try to negotiate a good deal, this is why we saw the Australian dollar strengthen in the markets. But we must remember the overall trend is aggressively down, which is why I'm not trying to buy the Aussie dollar unless there's really strong fundamentals coming out of Australia to push price higher. I wouldn't really be getting excited and trying to buy this currency, because the overall trend at the moment is still down, and we know the dollar's bullish overall because of the expectations of a rate hike. However, traders, we must remember, looking at Aussie dollar, US dollar, we have come into a major band of support at the moment, which is price, which is currently 0.7500. This is actually a major band of support, as you can clearly see. This has caused major rebounds before in the market, so coming up to this price level on a monthly chart, we should expect to actually see buyers around this level, because this is a major band of support. So it'll be interesting to see if price does try to retest this area again. If it does try to retest, and the economic data or the momentum coming back for a retest isn't very bullish, we can potentially take a technical buy, because it will really take some really strong data or some strong expectations of aggressive rate hikes from the Federal Reserve to take this currency pair any lower. So I do want to be monitoring this and watching this closely. And if we do get a break above 0.7600, this can potentially be a buy back up towards 0.77500. Looking at the New Zealand dollar traders, so we know the New Zealand dollar is weak over all traders with the dollar, very aggressive downtrend. This is because the New Zealand central bank, the Reserve Bank of New Zealand, came out and said they want to keep the currency weak. They don't see they're going to raise interest rates anytime soon, because the economy is not in a state, and inflation is nowhere near overshooting their 2% target. And this is why the New Zealand dollar has been weak across the markets, because of the comments by the central bank saying they like the currency to be weak in the markets. So traders, that's the US dollar majors. Now you understand the fundamentals from all of the currencies. You can match them up against each other and understand why price is moving. So for an example, if you look at euro versus the Japanese yen, both currencies are currently using quantitative easing. No one knows when, if the ECB is going to end QE in Europe, and the Japanese yen is a weak currency because it has low inflation, low interest rates, and it's also using quantitative easing. So interest rate hikes are not happening anytime soon in either currency. So I wouldn't be buying or selling these currencies at all. If you're looking across the markets, traders, so for an example, looking at the Great British Pound versus the Aussie dollar, we now know that the pound is weak because expectations of a rate hike have diminished, and we know yesterday the Aussie dollar was very strong because of the trade war concerns fading, supports the Australian economy, because anything that's positive for China is positive for Australia. So traders, just take the fundamentals I've given you, match it up with different currencies, and if you have any questions about any currency pairs, please feel free to ping me a message. Just looking across the markets at potential trading setups, traders, I'm just monitoring what I'm seeing before taking a buy, but I am interested in potentially buying Aussie dollar, Japanese yen as a potential buy setup in the market, as this looks like a juicy trade coming into the next week or so. But again, it has to be driven by strong fundamentals coming out of Australia. And at the moment, the trade war concerns fading is good, but it's not the bullish Australian dollar is not being driven by any economic data coming out of Australia. It's more to do with China, so I'm a bit cautious at the moment with that. So just holding USD yen at the moment, and hopefully we'll get into some new positions fairly soon, traders. Thank you.